Morning traders, welcome to the latest edition of Talking Ball. It's the 5th of December. I'm Joe, joined by Steve this morning. How are you, Steve?
Very good, thank you. Very good.
Good.
Very satisfied after yesterday's results.
Indeed, yes. Good performance. It started off a bit drab, but then they kicked into action and got the job done. And it was, pretty good. Not looking forward to France, though. I've got to say.
But no, why not?
Mbappe running up against Maguire is going to be a bit scary.
Yeah, I suppose so. But yeah, completely different game to what we've seen from France. I don't expect France to look quite as good against England. They're a much better side than what they faced up until now. So
yeah,
it should be. Yeah. Well, yeah, I think so. I think it's like it's one of those matches. I think it's an evens chance, really. I wouldn't necessarily fancy France more. I mean, if you take some of their players out of the team, yeah, I'd have them in our side. But actually saying that, the front line, Mbappe, would he get in against Kane? Don't know. Foden?
Definitely.
What about Saka?
No, of course not. Saka's untouchable.
Henderson, sort of like, just Henderson would sort of like make any world squad, wouldn't he?
No. Did well yesterday, to be fair to him.
Very well, yeah, very good.
Okay, let's stop boring people with football. Let's move on to what's happening with the markets and how we're setting up for the week ahead. So over the weekend, we saw some decent headlines with regards to China. But first of all, we'll tackle the non-farm payroll number, which came out on Friday, and that increased to 263,000. So a pretty solid number for November. It's above the consensus forecast of around 200,000. And the October increase was revised up to 284,000 from the original reading of 261. There was, however, a small increase in private sector payroll growth, which was offset by a stronger gain in government jobs. There was a significant decline in retail jobs for the month, with transport and temporary jobs also recording a decline on the month. The unemployment rate was unchanged at 3.7% and in line with market expectations, with a reported 138,000 decline in the number of employed in the household survey as the participation rate edged lower. There was a strong increase in wages as well. The average hourly wage increased 0.6% for November, double the consensus forecast of 0.3%, with the annual increase at 5.1% from a revised 4.9% and above the expectations of 4.6%. So now we move into a silent period for the Fed. There will be no further comments on monetary policy by Fed officials ahead of the December 14th policy meeting. So we've got 11 days to wait for that. And as mentioned, there was some Chinese coronavirus optimism. The China government announced some easing of the coronavirus restrictions over the weekend. And there's also been strong hints from President Xi over the weekend that there was scope for further easing of restrictive policies, given that the Omicron variant posted less risk to the population. Hopes for an easing of restrictions were pivotal and triggered a further boost in risk appetite on Monday, and we saw the US dollar versus the Chinese yuan trade below the 7 level. The dollar was unable to hold on to any gains post the strong number on the jobs data on Friday, but failed to hold on to those gains and retreated to around pre-data levels as underlying dollar sentiment remained weak. In terms of what's going on with the MPC in the Bank of England, Monetary Policy Commission, one of the members there maintained a dovish stance with comments that there would be risk of a deeper and longer recession with higher interest rates, while there are a few signs that demands for higher wages risked a wage price spiral, given that rates are declining in real terms. The Canadian employment rate also dipped. That went to 5.1% from 5.2%, below the expectations of 5.3%, with a 10,000 increase in employment. And tomorrow or overnight, we have the Reserve Bank of Australia will announce their latest interest rate decision, with consensus forecast for another increase in rates to 3.2% from 2.85%. A bit of a strange number, but let's see what they come up with overnight. So let's move on to some charts. Steve, do you want to kick us off with cryptocurrencies to start the week?
Yeah, no worries. I'll share my screen now, mate. There we go. Yeah, look at Bitcoin to start the week. Bitcoin's continued, really. If we look at the weekly chart, it doesn't really feel like there's much going on. However, it probably doesn't feel like that on the ground or trading it. We've had 2 positive weeks, We posted the swing low on the week of Monday, the 21st of November. The low was 15,479. That was a price we hadn't seen since all the way back in November 2020. So a 2-year low was posted then. Last week was a little bit more positive. We broke up and we actually managed to climb above the initial resistance band, which I'd drawn on this chart. Oh, what have I done there? I don't want that. I want this. So this is the daily chart, and we can see we've got plenty of resistance above. We've got I've highlighted the swing low from the 18th of June as another resistance just above. We've broken through the band, so it's a little bit of a bullish flag formation forming potentially. So yeah, it feels quite positive to start the week. 17,312 we're trading, so we're above the 17,230 level, and yeah, next resistance just in front of 17,600. On a short-term time frame, we can see on the 4-hour chart we got a break above the downward trending resistance line, which we talked about last week, and this has continued higher. We've got Ichimoku cloud support down around about the 16,800 to 16,750, 730 level. However, if we look at, there was one candle I was looking at. No, it might not be on this. It was on another one, another chart I'll show you in a minute, which showed signs of topping out, but it wasn't here. Yeah, so bit of room on the upside. 17,600 next resistance. Free room. Although these candles are sort of like, yeah, I was going to show the volume. That's what I was going to show on the daily chart. Let's take a close look at the volume. You can see the real volume spikes have been on the bearish candles. That we see the breaks lower, and as volume is slowing down, we're getting a little bit of a rally, so that indicates some sort of bearish divergence. So be a little bit wary of this rally. It's on very, very low volume, so it doesn't really indicate any real strength to me. I'm going to take a look at commodities now. Gold really is the interesting one. We're challenging resistance that we saw from the swing high from the 10th of August. That got up to 1808. We've breached that this morning. What's the high we've got here? 1810. And on Friday's price action, that was a hanging man candle. So a little bit nervous about that one. That's them sort of candles you get near the top of the trend, and this impulsive move higher is running into resistance around here. However, we are above the 200-day moving average. That comes in around about the 1795 level. We're trading 1798, so I think we should get some sign or some indication of whether we've got the strength to push higher towards the measure move target of the double bottom, which is up at 1844. I'm a little bit undecided as to whether it feels like we're going to go there. We've seen sort of like volume dropping off as we rally, so another sign to be a little bit wary of this rally. It's not full of really strong buying, so yeah, just be careful of getting sucked in at these levels. The resistance for me has held at the moment. 1810, the level to watch. A break above there does open up a decent potential move to 1845. Otherwise, we just got to keep looking over our shoulder and looking at 1780 probably the support, and this pivotal level below there around about 1765. Silver currently today is posting a shooting star candle. This is a bit clearer. We've got the inverse head and shoulders again. The measured move target for that is up to $24.92, $25 historically has been quite a pivotal swing level as well. So that looks, over the last 4 days of positive price action, looks really, really decent. But again, the hanging man and the shooting star make me a little bit nervous today. If we manage to get that follow through today, close a bit higher, then that does open up that potential a lot more, because there doesn't seem to be much in the way of resistance between now and the measure move target, and even the next sort of like band of resistance, which is over $25.50. Copper has posted that double bottom that we talked about and broken higher and hit the measured move. It's below the 200-day moving average. That comes in just below the $4 mark at 395, and obviously that we got that swing high also at 396. So yeah, that's looking pretty positive. Another 4 days of really positive price action. So a really decent week next week, which probably engulfed, yeah, pretty much engulfed the previous week quite easily. Nearly took out the week before's price action. So positive news from the copper. All these assets obviously priced in dollars. Dollar index taking a bit of a hit, so it leads to a natural lift in these markets. Crude oil. Taking a look at crude oil, we're still trying to bounce from this potential double bottom formation. The neckline is way up at 92.90, so we've got a long way to go to get there. We'll have to ignore it for the minute. Volume's pretty steady last week on the daily chart, you can see. We have had a little bit of a turnaround, a little bit of a bearish evening star formation. Thursday's price action obviously had that rally and stalled at resistance, stalled at the 55-day or in front of the 55-day moving average, and moved lower. And Friday's price action was engulfing, was bearish engulfing. Today we've had a little bit of a spike higher, haven't quite taken out Friday's high at 82.10, stalled in front of there, and now looking to challenge the lows from Friday, 79.70, that sort of area. There's the support and resistance. Trading a break of either would probably lead to some good potential volatility. Brent crude oil, similar sort of price action. Again, the evening star formation formed after this reaction rally from the lows, and we opened up higher by the looks of it today, but we're already down below Friday's low. Support looking at $85 and resistance really 87.80, and looking for a break either way. Natural gas has continued its horrendous performance. We've got very clear 1, 2, 3, 4, 5, 6, 7 days of negative price action, and we've opened up with a gap lower today. So trading around 580. Friday's close was 620. Wouldn't be surprised to see that gap being filled before further downside, but really under pressure, the natural gas. And yeah, that's probably a good segue into taking a look at the dollar, which is obviously driving a lot of these prices.
Indeed. Okay, let's just take a look at that then, shall we? So on to the FX markets. We'll go through all the majors and any other requests that there may be on some of these markets. Start off with this chart here. So this is the daily chart that I've been annotating over the last few weeks and months. And as far as I can see, we have completed a head and shoulders top on the US dollar. So we saw this big upward trend. We saw the break of trend back in early November. We then formed a head and shoulders from what I can see on the breakdown through these major supports at 105.34, then at 104.63. So we closed below that major support there, that last line of defense, which was from a swing low back here in August. We are trying to put in a little bit of a bounce as things stand, only up by 0.6% at the moment. But for me, it looks like the top is now in place and we can continue selling rallies with some degree of confidence on the back of that. So anything up to kind of 106.15 for me would represent an opportunity to buy, and we can start looking for lower levels. The measured move of the head and shoulders top pattern, just to give you an indication of where our sort of more medium term targets are on this, is down here at 95.96. So that would be a fairly substantial drop in the value of the US dollar. In terms of percentage terms, we can go from the high, that's not worked, from the high down to that measured move target, which would be almost a 16%, 16.5% drop in the value of the dollar. So we'll wait and see whether or not that plays out. We have got a 61.8% fib level down here at 99.12. I haven't got the 50% drawn on, so let's get that on as well. Just to give us another reference point on the downside, that's at 102.15. So still looking for bearish pressure here. Yes, there could be some bounces as we have seen 3 consecutive days of losses, but I think they're going to be capped and still looking for lower prices here. So that means I'm looking for higher prices on Euro US dollar. As we can see, prices broke out through this consolidation or continuation pattern higher, and prices have extended towards this measured move of this bottom pattern that we've got on the chart. and also towards this 38.2% fib level, which is at 106.10. And that fib level goes back to those highs that we posted back here in January 2021. So since then, prices have been on a major decline. We are now in corrective mode, potentially forming some sort of bottom and reaching the first objective on the upside, which is that 38.2% level. If we look at how the candle's shaping up early on in today's session, we can see that we've made new highs, but we are rejecting a little bit at the moment. So we do need to see some buying impetus return, but we have seen 3 pretty strong days there. So I wouldn't be surprised if we do get an element of a pullback, and then we can start looking to buy dips on that. Let's take a look at cable. That's rallied into a significant level, a 50% Fibonacci retracement from this entire down move, which I've highlighted as beginning back here in February 2021. Big move to the downside. Then we saw this panic low in September, and prices have rallied very sharply since, now slamming into the 50% Fibonacci retracement level. So that also lines up with these swing highs from back here in August. So a pretty stiff area of resistance, I would say, on this, and it's going to have to do, a pretty good job at breaking through that in order for us to get some acceptance of price. So we may see a pullback to retest some of the newly formed supports, get some acceptance of price before we can have a really good go at trying to break out through resistance here. We may well do it today, but as things stand, we are just below that level, trying to get through it. But I think there's a pretty big area of resistance there and probably a few stop losses as well. So if we do get a big push up, we could trigger those stop losses, and that could result in further short covering or prices continuing to push higher. The next objective is the 61.8% fib, which is up at 127.57. And prior to that, we've got these swing highs here, or these previous highs here, which may act as resistance as well, around 126.26. Let's take a look at Aussie dollar. That's trying still to break out through this downtrend. I mean, it has done it, but the price action isn't really kind of pushing away to the upside. We did see a close actually below the resistance at 67.97 that we'd highlighted last week. It does look like this is a continuation pattern following the inverse head and shoulders completion. So I'm still looking for higher prices. The measured move of the head and shoulders target, head and shoulders bottom is at 68.74. So we've come up just shy of that. So looking for an opportunity to buy on dips with this, I think, at the moment, targeting higher prices. If we're looking at some fib levels to target, we can go from the highs in April down to these lows that we posted in October. We've got a 50% fib level at 69.15. So that would be a pretty good area to target, and also pretty much lines up with this inverse head and shoulders measured move target. So looking pretty strong there. Let's look at New Zealand dollar versus a US dollar. That continues to trade in a really sharp bullish channel, and we are tapping the upper end of that channel as things stand. Yes, we may see some pullback towards the lower end of the channel, but all in all, this is looking pretty bullish as well. No real sort of structural formation of any major bottom pattern, but it does look pretty good. We are fast approaching a 50% fib level at 64.88, so that may cool things off in the very short term, but may give us an opportunity, if there is any pullback, to jump on board with that and try and ride it higher. Looking at dollar CAD, so we completed a head and shoulders top on this. It looked like it was coming under threat, and we were going to see a reversal of this pattern, an invalidation of the head and shoulders top, but we got this bearish candle that we posted last Wednesday, and then prices have continued to move lower since. So still thinking that the bias is for lower prices here, so I would be looking to sell into rallies, looking for a continuation lower. The measured move of the target comes in at 130.14, which also roughly lines up with a 50% fib level. Dollar Swiss, that's now breaking down through this trend line that we've been speaking about for a while. You can see here this blue uptrend line is now has now been breached, and we've also taken out these swing lows from August. We saw a close just below that level on Friday, and we're pushing lower again today. So under pressure here. We do have a major level of support at 92.88. So it'd be interesting to see if prices get there and what kind of reaction we get. Maybe just a reversal to retest that newly formed resistance before lower prices then ensue. And let's take a look at dollar yen. Broken down through a number of supports. This was the kind of last line of defense that we had at 135.58. We're below that. Yes, we're higher today by 0.6%, but still within the body of the candle that we posted on Friday. And provided that we remain within that and below this level of resistance at 135.63, then I'm still looking for lower prices down towards this region here at 131.31. There is a request to take a look at Sterling Oz, so I'll do that. And this is the daily chart. Big line of resistance that I've got drawn on with this thick black line, that's at 181.26. So while prices remain below that, I'm still of the opinion that we may see lower prices with this, but all in all, it could be in the process of forming some sort of bottom, but this is a major level of resistance. Let's see if there's any fib lines that match up with this as well. Going from this high in January down to those crash lows. So we've got 61.8% fib level, which is fairly close by. We've kind of hovered around it, so it hasn't really done much of a job at providing resistance or support. So I'm sure we just discount that for the time being. So just really focus on this 181.26 level. If there are any opportunities on the intraday charts, let's take a look at the 4-hour to see if there's anything there going on. That's the daily again. We can see a big level of resistance here. So potential for a bit of range trading action. Let's see if how that looks on the 4-hour. And again, just highlights that range. So we've got the upper end of the range coming in around 181.08 and the lower end of the range coming in at 174.80. So providing prices remain below these levels here, obviously the highest level we printed was that level there, which is 181.99. So you'd probably want to stop loss above that level if you're going to try and trade this range and target a move to the lower end of the range. So from a risk reward perspective, as things stand right now, if you were to sell at current prices with a stop just above those highs, targeting a move down to the lower end of the range, you're looking at about 3.3 as a risk reward ratio on there, which isn't too bad at all. But a pretty clear line of where you need to have your stop loss above those highs, and a pretty clearly defined target as well, being at the lower end of that range. Hopefully that was useful.
Nice one. Cheers, Joe.
Okay, indices, Steve. Want to take a look at those?
Yeah, sure. I'm going to take a look at NASDAQ first. Basically, this is the daily chart. Let's just hide the volume for a minute because it's a little bit distracting. So the overall move trend down from the all-time highs, we seem to be forming a bottom. We've got a nice clear head and shoulders formation with the neckline around about a 38.2% fib retracement of the move from the 16th of August downwards. Also, we've got a nice downward trending resistance line coming in above the market at the moment. Today, it's coming in at 12,282. We've got other confluence above there. We've got the 61.8 up to 12,463, and that's where the 200-day moving average is also. So we're just at the top of this Ichimoku cloud, this nice red cloud behind. That's resistance. Looking overall, basically really focusing on last Wednesday's performance, which was the real big turnaround in the indices last week in front of the 55-day moving average. We're hanging around the 100-day moving average as we speak now. The other market, Joe took a quick look at this, I think, last week, is the China 50, and that is performing really, really well. Looks pretty decent. Really sort of trying to pick out, see if we can get other sort of like areas of resistance. 50% fib retracement would be a move up to 13,108. That's not very far away at all, about 170 points away. We are trading at the 100-day moving average, be aware of that, and the 200-day moving average comes in at 13,371. But yeah, it just looks like a nice inverse head and shoulders formation. Let's just draw it on there to give you an idea of what I'm talking about. This would be the left shoulder, neckline, head. So we have sort of like broken through that inverse head and shoulders. Measured move target for this would be up a move up towards 14,436. So has that got the opportunity to play out? It does feel like a lot of these indices are turning around quite nicely. Also looking at the Hang Seng, which was probably a little bit more interesting than the other markets we normally cover. This has got a huge confluence area all the way up, well, just above where the measured move target of this inverse head and shoulders is. The inverse head and shoulders look to retest the neckline on Friday, performed very well and is kicking on. I suppose the Far Eastern markets now, talk of them opening up is leading to a lot of hope that we'll get a decent recovery in price. If we take a look at the overall downward move, we can see a 38.2% Fibonacci retracement just above the 20,000 level, coming in at just under 21,000, 20,926. So that'll be a decent target to look for. Also, the 200-day moving average not far away, 19,890. 20,000, that'll obviously be a little bit of a psychological level, but I wouldn't put too much onus on that level itself. And obviously, taking a look at DAX a little bit closer to home, we're banging our heads against this big area of resistance that I've got highlighted on the charts. It's around the 61.8% Fibonacci retracement level of the swing from the start of the year to the low of the year in October, and the reaction rally, the really strong reaction rally we've had from there, but really struggling to push its way through. The only one that's really managed to get through that similar sort of level of resistance, but still hasn't taken out the year. The high of the year in FTSE is 76.87. We had a big reversal on Thursday, and it seems to have held on by its claws on Friday after this initial sell-off and slightly more positive price action. But we're in this band of resistance, and there's another big band above. So I think these, even looking at the Dow, obviously the Dow is the one that I feel the trend line, the downward trend has been broken from last year. But again, it seems to be sort of posting these bearish candles, so it's struggling to really kick on properly. S&P also hasn't managed to get above that downward trend of resistance line, and the candles forming on the short-term chart, on the daily chart, aren't that great. So, but we're above the 200-day moving average. So I think I'm just waiting to see if we're going to get that sort of like second wind in these indices. But at the moment, apart from the Far East, I can't see it.
Okay, thank you, Steve. Okay, that concludes the roundup of the charts. As always, if anybody is watching these videos, then please feel free to get involved. Let us know what you're looking at, and we'll do our best to cover any markets that we haven't already gone through, if there's anything else you guys are trading. And if you're looking at the video later on in the session, feel free to join in 8 o'clock in the morning UK time. Watch us live, and we'll do our best to interact with any suggestions or charts that you're looking at. So next, we're going to look at the gun to the head challenge. So this is something that Steve and I participate in every day. We come up with the trade idea as if we had a gun to our head. What would we trade right now in the hope that it can turn a profit between now and 9 p.m. UK time when we close these trades out? So it is very much a day trading opportunity that we're looking at. It is just, the idea of it is just to have a bit of fun. Each of the ideas we come up with must have stops and targets. So we're not just picking something and letting you guys crack on with it. There are stops and targets in place, and they're all placed at market. If anybody wants to follow how these ideas do throughout the trading session, it's very easy to do. Just go to our trading view profile, which is signal_center, and you'll be able to see all of our previous ideas here. So let's take a look at the ideas from Friday. It was non-farm Friday, so we were expecting a lot of volatility. And amazingly, we both managed to hold on to our trades without getting stopped out. But sadly, they were both slightly offside. So this was Aussie Yen looking for a completion of a head and shoulders top on the intraday charts, and it's trading within a range. At 9 o'clock, it was offside by 0.26R before eventually going on to hit the stop and then reversing back in the direction that I thought it would go in. But due to the game that we played, 9 o'clock was when we closed it out, and it was ever so slightly offside. Steve, you were trading Bitcoin again. You've done this a number of sessions in a row now, still looking for this breakdown to come. Big level of resistance there. If we click the play button, we can see that at 9 o'clock, Steve was offside by 0.17R, and it has actually gone on to break through that resistance level, as Steve mentioned in his analysis earlier. Does that mean you've given up hope on Bitcoin shorts for now, Steve, or are you going again today?
No, for the moment, I'm just accepting defeat and stepping back. It's just a battle I've lost. It's not the war I've lost. So no. I'll come. My day will come.
Indeed, I have no doubt. So, Steve, what are you going to trade for us today?
Well, I'll tell you what I will do. I'll sort of like it be just a quick trade today.
I'm happy to have
Really,
a go if you want some time to prepare.
well, yeah. If you're ready, go, and I can just like summarize it quite quickly after that.
Okay, fine. Well, I'm taking a look at sterling yen. Looking at the hourly chart, we can see some reasonable kind of setups and structures in place here. So we saw that the price was trading in a pretty decent bullish trend here on the hourly chart. This goes back to November, mid-November. Then it looked like we completed some sort of head and shoulders top, and prices continue to move to the downside. And since then, prices have been contained within a bearish channel. Pretty decent setup, I think. But obviously it's got as good a chance as any. There is, every chance it could go on to hit the stop loss, but at the same time, looking to target a decent move down within this channel. So the trade for me today is for looking for a continuation within this channel. It's currently trading at 165.74. I've got a stop loss above the swing high that we posted at 7 o'clock this morning. That's at 166.41. And I'm targeting a move back down to these swing lows that we posted on Friday, which comes in at 164.07. So looking for a risk reward ratio of 2.57 on sterling yen today, hoping that it continues to trade within this channel and we can eke a little bit more out on the downside with that. So that's ready to go, going to get published up right now. If anybody wants to check it out throughout the trading day, please feel free to do so. But that's my trade for today.
Excellent, nice one, Joe. I'm going to take a look at natural gas. So natural gas is bearish. Remember that I said that first. However, we have had, I feel there's a little bit of maybe a short-term reversal opportunity. Let me just click. Yeah. So we've opened up lower. We've opened up support, reacted a little bit higher. There's a gap to fill here. So that's what I'm going to go for. I'm going to trade this gap fill. Pretty much just most gaps get filled on the day. The ones that don't, there's a whole program we could do on gaps and everything else like that. So let's get the get in now. Targeting a move back. Stop has to be pretty tight. So yeah, I mean, even trying to get a 2-to-1 risk reward out of this is going to be difficult at the current levels. But I'll do my best anyway. All right, let's really go for it, shall we? Yeah, we're going to have a 65 tick stop. We're going to have a 260 target. We're going to get a 4-to-1 risk reward out of this, baby. So that's what I'm going to go for. I'm going to buy at 598. The stop is at 591, and the target is 624. They've got little. Let me just round that up. Target is okay. Risk reward has changed a little bit, 3.71. The target is 624. The stop is at 591, and we're getting in at 598. That's
Boom.
it.
Okay, a couple of trades there, guys. If anybody wants to check them out, bear in mind this is obviously a very risky approach. We are just coming up with stuff as if we had a gun to our head, but we've had a pretty good track record at doing this over in the past. But win rates are around sort of 40 to 43% on these. So I guess our default expectation actually is to lose on these trades. But because we have those strong kind of punchy risk reward trades, when we do win, they tend to be, significantly outweighing any losses that we have over the course of time. So they're going to be posted up to our TradingView profile. Check them out if you wish. Let's take a look at what we've got on the day ahead on the economic calendar. So at 3 o'clock today, we've got US ISM non-manufacturing index. So keep an eye out for that. Every data point really is live at the minute when it comes to the US, but of course, we're not going to get any Fed commentary now on monetary policy until we have that meeting on the 14th of December. Overnight, 3:30 a.m. UK time, we have the Reserve Bank of Australia policy decision. So if you've got any exposure to Aussie dollar or the Aussie indices or Aussie stocks, please be aware of that because it could be quite a volatile event. I'm sure you don't want to be up all night monitoring your positions if you're based in Europe when it comes to that, but it is worthwhile being aware of that and placing your risk management strategies accordingly. So that is that for today, Steve. Wrapping up Monday, that's done. So yeah, let's look forward to the rest of the week from here.
Yeah, nice one. Good luck, everyone.
Have a good day. Goodbye.